Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Monday. It's February 13th, and it's about 7:47 in the morning. I'm trying to get an early start to get these videos to you guys as soon as possible. If you guys are getting value out of these videos, if you're enjoying these videos, if these videos are cool, if you hate these videos, I don't know what else to say. But give me your comment and feedback in the Wealth Press YouTube channel. I want to hear what you have to say, and I'll post a reply there, so that others have the same question, can benefit from it. Now, the market's gearing up to open a little higher today. The Nasdaq's up about 79 points. The Dow's up about 57. Honestly, this is randomness. This isn't anything meaningful. Now, this week, when everyone thought earnings was over, they're not. We still have a lot of numbers behind us. I mean, we got the FANG stocks and we got the large cap tech, but we're only about 5/8 on the way done, about a little less than 2/3. So we've got Advanced Auto Parts coming out today. We've got Avis budget cars, Denny's, Checkpoint Software. You've got Vornado Realty Trust. You've got a lot of earnings. Tomorrow, you've got Coca-Cola. Here's the estimates right here. And if anybody wants this sheet, just send me an email and I'll post a link, and you can look at it and you can have your weekly sheet as well. But we got Airbnb, you got Cleveland Cliffs, big stocks, GoDaddy, meaningful stocks that have some impact on the economy. I mean, just because the FANG earnings are over, it doesn't mean the world comes to an end. You got Marriott, you've got TripAdvisor, you got Weber, you got ZTS. Then on Wednesday, you've got Cisco, you've got Albemarle, AIG, ADI. That'll be very interesting. Barrick Gold, very, very interesting company. Biogen, can't wait to hear what they have to say. CF. So you've got a lot of energy, a lot of industrial, a lot of oil companies, a lot of stuff. Generac is reporting. I can't stand this stock right now. Equifax is reporting. But you could see here, we still have a lot of large caps. Now, after this week is over, we're going to shift more towards the retail and then more towards the small and mid cap stocks. But this is the last week of the large caps. I mean, look at this on Wednesday. You've got Zillow, you've got SunPower, you've got CGen, Roku, a lot of big stocks that everybody trades. And on Thursday, one of my favorite stocks, Crocs. I have not given up on this stock. It's been doing pretty good, actually. I'll take a look at it later. But they're looking at a 5% year-over-year revenue growth, EPS growth, and 60%, revenue growth. That's quite a bit. So I'll be watching that one. You've got gold miners, Applied Material, one of the biggest semiconductor stocks, Cohu coming out, Con Edison coming out, Datadog, Digital Realty Trust. A lot of real estate investment trusts are coming out with earnings. But I wanted to just kind of show you what's on the table and to give you an idea that we're not done just yet. Friday's not going to be as busy of a day earnings. The big focus for Thursday is going to be Crocs. For Wednesday, the big focus is going to be Cisco. For Tuesday, the big focus is going to be Coca-Cola. And today, we're just very broad-based. Now, looking at the Fed data, oh boy, we've got some Fed data. You've got CPI tomorrow. Then you've got PPI on Thursday. And you've got retail sales. Now, this is going to be very interesting because we'll be able to see if the core PPI and the core CPI are, in fact, slowing down, or if they're gaining speed. If they're slowing down, continuously slowing down, that it'll reinforce that what the Fed is doing is, in fact, working. But I think we're going to have a couple of bumps in the road. Also, we're going to have retail sales data, very, very important. I'd love to see this number before the CPI, but it looks like it's going to come out after the CPI, but it is coming out before the PPI. So we do have, when is the PPI coming out? Right there, 8:30 in the morning on Thursday. So we're going to have a very busy week with Fed data. Not a lot of Fed speakers, but a lot of Fed data reporting today. You want to keep your eye on the bond market. The gravitational pull, as you could see here, we're bouncing off the 200-day, literally bouncing off the 200-day moving average. And it looks like we're headed down. The more lower this goes, the more pressure it puts on tech. All right. Now, I warned you last week that tech is not going to stay. Remember communication services? It was the number one sector last week. And I said, don't hold your breath. It's not going to stay there. It's going to go lower. Energy, industrial, financial, basic materials, they need to come up. Technology, communication services, and consumer discretionary need to come down. And I'm anticipating a nice big fat shakeout to take us down over here with these defensive stocks starting to come up. Matter of fact, if you look at my momentum study, you will see that you'll see here, where's the communication services? This was at 80th percent last week. I want to show you this. Look at that. And I told you it was going to happen. Look at that. Just to give you some perspective. Remember we went up here and I said, I don't think we're going to stay here. Well, we went from 91 percentile to 60 percentile in 123 in 3 weeks. So that 60th percentile is not anything great. And now look at how many are above the 200-day, 52. So you still have more on the 50 than the 200, and that's showing me a lot of vulnerability. Information technology, same thing, and consumer discretionary, same thing. I'm expecting these to cool off, to start coming down. See that? It's already peaked. So I'm expecting more downside for technology. Look at this. Do you think it's going to go higher than this? This is the last 5 years. It's overbought. So it looks like technology, consumer discretionary, I'll show you, it's doing exactly the same thing. And consumer discretionary stocks are up next. And I don't think they're going to be all that great, especially in light of what we heard from FANG and tech stocks. So again, I'm expecting more downside. Probably by the end of this week, maybe beginning of next week, we'll start seeing technology cool off as well. And energy, industrial, financial materials lead once again. Whenever you have technology, communication services, consumer discretionary totally out of whack with each other, that means the market needs to go down. It's out of balance. The market gets out of balance as it goes higher, and it gets back into balance as it consolidates. So this is an extremely fragmented market. Just wanted you guys to understand that. And I know I was a little early to the party with the NASDAQ hitting all-time highs. I mean, not all-time highs, swing highs. But as you could see right now, we're not looking all that great. Matter of fact, if you look at the QQQ, you will see that it's having a really hard time staying above this price action. And that's what I was warning everyone about. And people were telling me I'm crazy and they're going to stop watching my videos because of this little thing. But I told you, this is not going to sustain itself. It's not going to break out. There's nothing good about this miniature flag. It's already breaking down to the downside. So be very, 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 very cautious. Now, let's talk a little bit about the economy. So investors look ahead to crucial U.S. inflation data due this week for more clarity on what the Fed is going to do and when they're going to do it. S&P settled in the green, but the rally was mostly from energy stocks as Russia plans to cut oil production. What news? NASDAQ fell to a one-week low because of communication stocks as bond yield. It puts pressure on stocks because bonds are going lower. And when bonds are going lower, it puts pressure on stock because interest rates are going higher. The University of Michigan preliminary data on Friday showed that U.S. consumer sentiment rose to a 13-month high, which is great, while one-year inflation expectation rose to 4.2% in February, above a forecast of 4%. Now, here's where it gets interesting. President Harker said, Philadelphia Fed President Harker said on Friday that the Fed needs to get the Fed fund rate above 5% and stay there for a while to get inflation under control. Now, the number I'm hearing and backing into is 5.2 to 5.4. We're right now pricing in 4.2. Rates are going higher. There's just really little about that. This week, oh boy, we've got US CPI data for January. That's going to be the highlight as investors look for clues as to whether inflation has in fact peaked out or it was just a little temporary fluke. In addition, we're going to be looking at US core CPI, core retail sales. Oh, yes. Retail sales, industrial production, manufacturing, and all of this good stuff. But the crux, the big one, is core PPI and core CPI. This number and this number, the core number, not the main number. That's going to tell us if we are in fact continuously moving in the right direction. Europe is up a little bit. Gains in defensive and travel and leisure stocks. The gains are limited because everybody's waiting for U.S. inflation update this week. So expect the markets to be a little choppy. China, strength in industrial and real estate stocks led the overall market higher. Inflation data released last week presents a mixed picture of a potential recovery, but manufacturing is still struggling. And manufacturing is China's biggest asset, right? That's what they do. They manufacture things for the rest of the world. Japan closed a little bit lower. They're waiting for data. There's just not much going on there. In terms of overnight movers or moves you can expect to see this morning, Zim is down 5%. Ooh, ouch. But we haven't been been on that stock. Caterpillar's down about 1%. Fidelity National Service is up 2%. I'm not a big fan of this stock. But overall, markets are getting ready for the big news and waiting to see what the market does and what the bond market does. Now, right now, the bond market is in a downward trajectory. I have a suspicion that the hooray party that we've been seeing over the past couple of this rally that we've been seeing, it's starting to run out of steam. See that? Broke below there. And I think it's going to continue coming down. And if the bond market comes down, it's going to be virtually impossible for technology, communication services, and consumer discretionary to stay so far away from each other, because there really are one big sector. They're all really interest rate sensitive. They're going to start coming down here, and they're going to start consolidating. That's what I believe what's going to happen, and that's what the market looks like it's setting itself up to do. Now, very important, very, very important before I let you guys go. Oil prices are rising again. You heard what I just said over the news? Listen to what I just said. I'm going to show you again. S&P settled in the green, driven rally in energy stocks as price of crude oil jumped over 2% on Russia's plans to cut oil production by 500,000 BPT in March. Half. That's 500,000 barrels in March. So, oil prices are rising, and Saudi Arabia suddenly increasing costs of customers in Asia, European Union, and the USA. That's not an easy pill to swallow, but the thing is, towards the end of 2022, our Jeff Zananeri said this was going to happen. He did. I remember we were on the same show, and I agreed with him. This could be a change, a very, very big change, and a chance to get in front of what might be a life-changing market move. And I'm telling you, I'm very bullish in energies now in comparison to tech and all those other stocks, because they're not nearly as impacted by the sensitivity of the Fed as technology. We've seen that over the last couple of years. That's why Jeff is calling for an emergency meeting. He's going live at 10 a.m. today to reveal his number one way to capitalize on this looming energy crisis. You don't want to miss out. This is happening right now. 500,000 cut. They may start cutting more. Follow the link below. Check it out. It's happening at 10 a.m. Eastern time today. Monday, the 13th of, what are we? We're in February. Jesus, we're in February. February, follow the link below. 10 a.m. on the 13th, Monday. It's happening today. It's happening in 2 hours. Jeff is getting ready for it. You don't want to miss out, and I'll see you there. Bye, guys. Take care. Have a great, great day.